All right, founders, it is time for another pitch deck critique and review. And this time we've got RegenX. I believe that's how we're going to pronounce it. It's an investment platform that makes impact investing easy and accessible. We are looking at a pre-seed round, and I believe that they are trying to raise $250K. We'll confirm that. Once we get to the Ask slide, we're going to jump in and take a look at this deck and see how we can provide a review, some analysis, a little bit of critique, and help this founder make better so you can go raise that pre-seed money. Before we continue, my name is Ed Kang. If we have met before, jump ahead using the timestamp right to the review. If we have not met before, I am a 7-time funded founder with 2 exits. That's just a fancy way of saying I failed a bunch of times to your benefit because I use YouTube videos like this and channels like this to try and help you avoid some of the catastrophic mistakes that I've made, especially raising early stage funding, pre-seed, seed funding. It's not to say you're not going to make mistakes, but I'm going to try to make your life a little bit easier because it's tough enough as it is. If you are a founder out there and you want your own pitch deck critiqued and reviewed, stay till the end of the video. I'm going to give you explicit instructions on how to get that done because I do this all day long for the 600 founders that are part of Startups.com, where I am the Chief Strategy Officer. We also have 4,000 alumni in our network. It's a fantastic community. If you have not heard about us, make sure you come check us out. A lot of free resources on our website. If you are part of the community, thank you so much. Appreciate your support. While everybody's here, do the YouTube thing, like, comment, subscribe, always appreciate it. Let's jump into this review. Looking at the title slide, the founder went and sent me the original deck and then sent me a revised deck, changing this title tagline right at the bottom here, which now is much better. We're looking for a tagline that basically explains this is what we're trying to do. This is the purpose of our company. And here, Mr. Investor, Mrs. Investor, whatever investor, you will expect to look at a pitch deck that says we're an investment platform that makes impacting investing easy and accessible. I appreciate that. This is a pretty good one. This is an A right there, straightforward. And we're off to a good start. Now we're going to go into the problem. The problem, first of all, is you've got your highlighted text in blue, and it's just as big as the rest of the text. This is nitpicky, but make this smaller and make the rest of this bigger. Put the attention where it needs to be. But let's read it. In Australia's $500 billion impact investment market, 2.16 million wholesale investors struggle to access verified green products due to high capital barriers, greenwashing, and a lack of transparency, directly impacting climate project developers who struggle to secure funding, resulting in missed opportunities and untapped climate solutions. We have so many concepts going on here, and I'm just going to explain to you where I automatically start experiencing friction. I do not know what a wholesale investor is. And maybe this is a term in Australia that you use on a regular basis. I don't know what that is. I would just think it's just investors or impact investors, and they're struggling to access verified green projects due to high capital barriers, greenwashing, and a lack of transparency. Now we've hit the next piece of friction because they're saying access verified green projects. For what? Is it to invest in green projects? All right. If so, why is high capital barrier a problem? I don't understand. Greenwashing, that starts to make sense, and a lack of transparency starts to make sense. Isn't a high capital barrier a problem of the actual project itself? Or are you saying that these projects are asking for too much money? You're putting way too many unknowns in my head, and now my mind is wandering, so this is not clear. I appreciate that you started off with $500 billion as far as the market size, and you told me how many that we're dealing with, but the problem is very vague. It's unclear. And then we say directly impacting climate project developers who struggle to secure funding, resulting in missed opportunities and untapped climate solutions. My question to you is, who are you solving for? Are you solving for the investors? Is it the investors? Or are you solving for the projects? That is going to be the big question right here. I'm going to read these bullets just so that I can get a little more context. But an investor, I'd never read these bullets. I would never read these bullets. I just look at this at the main headline and then I say, I don't get it. And then I'd probably be done with this pitch deck. Just letting you know, this is the brutal reality. We don't have a lot of time. But it says, I experienced difficulties accessing incredible impact opportunities firsthand despite 20 years of wealth management. Okay, so now this is the CEO. So that's not going to cut it for you unless you're talking about this as far as your story, the reason you're bringing it together, which you can move to another slide. But also your credibility in wealth management, are you saying that you were an impact investor? I don't know. Like, you're not giving us enough information to understand whether this bubble is relevant or not. Next, average minimum investment for institutional impact funds is $500,000, locking on 91% of wholesale investors. Okay, so this tells me that you might be solving for the investor. All right, so maybe you're solving for the investor. I don't know. Next, according to Morningstar 2023, 58% of ESG funds misalign greenwash with their marketed claims affecting investor trust. So you're solving for the investor. So then why don't you just have a statement that just says that there are 216 million impact investors that want to invest, but they can't because of minimum prices and lack of transparency, greenwashing. It's pretty much straightforward. All the other stuff that you put in there is irrelevant if this is the problem that you're solving for. Once again, let's look at it from both perspectives. If I'm solving for the investor right here, I would say there are 216 million impact investors in Australia that want to invest in green projects, but can't because of minimum funds requirement and lack of transparency and reporting because they're fake. Something to that effect. Bang, straightforward. Now, if I'm solving for the projects, what I'm going to say is that there are $500 billion worth of projects that need funding, green projects that need funding, but they're having a problem attracting investors. You see how I've taken one side or the other, trying to cram both of these together. And I understand that you're doing a double-sided marketplace. I totally get it. But you see how you lost me with this, but if we actually just pick one side to tackle from, you're going to be helping both. You could be making this so much easier. Now, before we move to the next slide, I want to point out a problem that I identified immediately. And this is a preview, so I don't spoil it. But most of the time, founders come to me and they have a solution looking for a problem. Founders say, oh, I've got this really great solution. It's going to do all this cool stuff, and I've dreamed about it, and wouldn't it be great if we did this? And maybe they're solving their own problem, and they come up with cool technology, but does that mean it's worth it for it to become an actual startup? Should you raise money on it? Are investors going to be interested? Is it a big enough problem that people care so that when you build your solution, that it's going to make investors their money back? That's the perspective that I'm taking. You as the founder, most of the time, take the perspective that you say, oh, this is a really cool solution, and I've come up with it. Of course I'd invest in me as the founder because I think the solution is really cool, but that doesn't cut it for investors. The investor wants to know, will the market think it's a cool solution? Will customers and users will actually make money? And so a lot of times the problem and the solution are misaligned because the founder starts with the solution and backs itself into a problem. It's a solution looking for a problem. And in this case, I'm going to question the solution and we're going to try and figure out how can we make sense of this, and you'll see how it works. The solution statement says, RegenX is a blockchain-powered investment platform that simplifies impact investing by offering investors fractional ownership in verified climate-positive projects, breaking down barriers, eliminating greenwashing, and ensuring transparency so climate developers can secure capital, deliver investor returns, and protect the planet. Once again, you're walking down a tall fence on both sides. But first, you have not done anything to explain to me based on why blockchain is important. Why is fractional ownership important? Unless you're solving the problem for the investor, which you did not do. You were not clear as how you're solving the problem for the investor. So for example, let's say the problem, we're going to go back to the problem here, and I'm going to just write it all on one slide, is that investors can't invest in projects because of minimums. All right, so let's say it needs $500K minimum to get involved in a good green project. So the question becomes, why is blockchain so important? And let me stop all of you here for a moment, especially as founder, because you're thinking to yourself, of course, because you can do fractional ownership. I don't know that that's the actual solution to the problem. You can do fractional ownership without using blockchain. They do it all the time. It's called a special purpose vehicle. It's called Reg CF crowdfunding. I know a founder that has done crowdfunding specifically for green projects. So why is blockchain important? You have not explained that to me. Now, I'm a big believer in blockchain. I'm a big believer in what's going on in crypto, and I understand. One of the reasons that blockchain is very important is because of trust. But you haven't explained to me that trust is the problem. You see how you started off, or this is my assumption. I may be completely wrong, and I hope you prove me wrong. But you may have started off with a very key insight into the problem and researched it and come back and say, you know what? Of all the things, blockchain could solve that, and here we're going to build it. but it doesn't come across in this deck. And that's where you're going to be behind the eight ball. You're going to be digging yourself out of a hole because the first impression is that you have a solution looking for a problem. Why? You could not articulate the problem concise enough for me to justify the solution and put the two together and go, oh, that makes a whole bunch of sense. It's a new insight. It's innovative. So let's go back and potentially reverse engineer this. Let's say the problem is trust. Okay, let's just put it out there. The problem is trust. And your problem statement was something to effect of $500 million was invested last year into green projects, greenwash projects that weren't verified and actually don't make an impact. Our solution is to put all of those projects on a blockchain so that we can verify that they actually have climate positive projects. You see how now the solution and the problem are linked up. If you went back to solve the problem for there are all these impact investors that want to invest, but it's not accessible to them, well, you don't need a fractional ownership blockchain verified solution. You can say one of the byproducts is once you're on the blockchain, you can take fractional investment, which opens up a bigger market. We can talk about that. But the problem is you're trying to boil the ocean, you're trying to do too many things, and this is not going to work. So that's where, founder, you have to go back and really sit down and think, can we justify using our solution? The same thing has happened all across the blockchain NFT space. People came to me with so many investment opportunities saying, we're going to do NFTs for this, NFTs going to do fractional ownership for that. Everything went rampant. And then now we've got Hatua Coin. Now we got that guy, Sam Bankman-Fried. Now I'm completely forgetting about it. He went to jail for a very long time, right? You've got all these companies saying, we're going to get into crypto, we're going to do blockchain, and there's rug pulls and there's scams, and so investors don't trust that anymore. The same thing's happening with AI. We have an AI agent for everything now. We have an AI co-pilot. We're building an AI for this. But does it really need to be put into AI? I see a lot of founders come to me and they're saying, we're now doing AI dating. We're now doing AI conversation. Well, sure, that sounds great, but do people really want that? Maybe you can change behaviors, but it's kind of like a vitamin solution, meaning that's really great to have. Sure, it'd be great to have fractional ownership or put stuff on the blockchain, but does it really make sense? Is it really that important? But if you can find a problem that can only be solved with the innovation of blockchain using NFTs fractional ownership, then that's great. But right now, that is not clear in this deck, and therefore you have lost me. At this moment in time, your deck needs to basically be retooled and clarified, which will affect the rest of the deck. But I'm going to go through this deck and I'll give you some best practices for your other slides. Market opportunity slide. We've got 162.5 billion. So we got 3.25 million Australian wholesale investors. I still don't know what a wholesale investor is, but you haven't explained to me exactly what they're going to be paying, so I don't understand. So you just want to basically do a little bit of math saying, how much is each one worth? That's all I need to do. And then you're going to say 2.16 million, find it difficult to access green projects. You just told me that all of these don't know how to access these green projects. I don't know what this means. Is this a strategic advantage? This segment doesn't make sense to me, and therefore I don't believe that it's your SAM. And then you've got 10,000 obtainable. You're going to be making $500 million. Again, I don't know what the unit economics of that. So that doesn't make any sense to me, but anyway, it's a healthy number. So what you want to do is explain what I need to take away from this in a stark headline right up at the top. Just say there are 3.25 million wholesale investors who want to invest in green projects. Great. And then what are you going to charge? We're going to be charging transaction fees, and then we're just going to say, hey, this is what it would equate to in my TAM. So we need some more explanation, but at least this is simple. You got TAM, SAM, SOM, and you're thinking in the right way. There's a structure the right way. It's just the information, the logic is not there for it to make sense. How it works slide. Once again, this is the highlight. Make this bigger, please. And we say investors can effortlessly access, invest fractionally, trade instantly, and view transparently the measurable impact across climate change projects using the RegenX dashboard. Once again, you have not explained to me how this works. You basically made a promise on this is how we're going to solve the problem, but you haven't explained to me what you actually do or to the detail where I go, okay, how does the blockchain work, etc. So here's what you want to do with this. You need to be thinking in your head, the investor is going to want to know how it works. You can't just make a promise like we have the cheapest solution at the best prices and it's most convenient and we're just going to flip it around in the fastest service. You can't say that because the investor's thinking, well, sure, that's a lot of promises, but exactly how does it work? So put yourself in the investor's head and say, these are the steps. And since you got a two-sided marketplace, well, you're going to have to figure out what is the problem that we're starting off with. And how have you gone and solved it? So the problem might start with the Green Project registers for your solution, your blockchain solution, and uploads their documents and makes NFTs of everything. Bang. The investor comes and looks at it and is able to see a score. Like you've got the idea where you want to put a score in and it's the marketplace, and they check it out and they verify, and then they buy an NFT, which represents fractional ownership, and that's the smart contract. And then when there's a payout, they get money. You see how simple that is? 1, 2, 3. Just promising we're going to solve the problem. It didn't do anything. Explain that. On top of which, you might want to just put a little bit of technical information saying we built on this blockchain so that they understand that you know technically what you're thinking about, and that when they do due diligence, they'll be able to contact you and you'll be able to have a credible conversation about the technical stack. The reason this is important is because I know for a fact blockchain investors are going to be looking for your white paper. I actually heard a new term the other day called the yellow paper, which is a grown-up version of the white paper. I've been out of blockchain and crypto for a bit now, so maybe it's just passed me by. All my investments are doing fine, but I guess there's blockchain 1.0, crypto 1.0. But you need to be thinking from the investor standpoint and go research what other founders, what other startups have done to secure investment, what collateral, what technically did they need to bring to the table for investors to make sure that they receive that investment, that they de-risked it, and that demonstrated their domain expertise and their technical stack was up to snuff. Because I tell you right now, there are a lot of founders building on janky blockchains and don't really have the expertise, and they're kind of trying to ride the wave of 1.0, but I know for a fact 2.0 is completely different. There are new layers like layer 2s, and there are completely new paradigms that are coming out in the blockchain crypto space, and you have to make sure that you are able to answer those questions when it comes to due diligence. Now we got the RegenX business model. We operate on a platform business model with 2 primary revenue streams charged to the investor and climate project developer. All right, this sentence is okay. You got investors' fees. Now this is what I don't understand. Assets under management fee. So are you charging the investors' assets under management, or how much they've actually put in? I don't understand. Are they keeping their money on your platform? So you're saying 0.8% annually for an assets under management. So are you saying that you are collecting all this money and you basically created your own fund? Am I putting in my $10,000 into a batch and you're charging me 0.8%? This term, I don't know if you really thought this through, or maybe you got a business model that I don't understand. I have a big question mark on this. This immediately doesn't pass the sniff test for me. What it makes me believe, I'm inclined to believe that you don't understand your business model. Climate developer fees, just put project fees, okay? Just project fees right here. Capital raising fees. So you're going to charge 5% of all capital raised. That's fine. And then 1% annual real-time data reporting fee. 1% of what? So 1% of all the capital that they raise. So you've got way too many question marks where I don't understand, and therefore your business model, it's just not clear. Go-to-market strategy. RegenX will acquire customers by integrating with Stellar and the ASX distribution network to access millions of investors, partner with wealth management platforms and independent financial advisors for seamless advisor access, and grow organically via climate network partnerships. You've loaded so much in that, I don't think you're going to be able to pull off that strategy. I'm incredulous at this moment in time. Give me one sentence that explains what your strategy is. We're first going to go on social media and sell directly or try to reach investors directly, and then get into partnerships that will refer. Then we say Stellar's distribution network of investors. I don't know what that is, right? So if I don't know what that is, then why would I have an investor? If I don't know, and you got that inside information, like I don't know what that is, why would the investor know what that is? ASX distribution of network investors, once again, I don't know what that is. Wealth management platforms, gateway to wealth management of their investors. Okay, I do know what that is, but it's all chunked in with the rest of it. I don't know if you're going to be able to do that, first and foremost. Second, climate networks. I don't know what those are either. So therefore, this go-to-market strategy, I don't believe you battle tested. I don't think you know what you're doing in terms of you thought it through. I think you've got a lot of ambition, and these are ideas that you'd love to pursue, or maybe you have thought it through. Maybe you know what's going on, but it's not coming through on this slide. And this is where all of you founders need to be very careful. Not just this founder, but all the founders that are watching it. You can have ambitious plans, and I understand, but all your dreams and all your vision mean nothing to the investor unless you can execute upon it. So if you present to an investor an ambitious plan and say, oh yeah, we're going to have partnerships, we're going to sign, Walmart and Amazon and Costco, just making it up, not saying that this startup, but investors going to say, well, how are you able to do that? Like, how do I know? How do I trust? How do I know you're not going to take my money and just go and try to throw all this stuff against the wall and it's not going to work? So even if you don't have a lot of battle-tested strategies, you need to explain these are the strategies that we're going to test. Give me some insight, some strategy, and say, we've researched the market. First and foremost, that's a go-to-market strategy. Researching the market first, that's the beginning of it. And based on our research, we believe that we are going to start here, which is going to eventually end us up over there. Simple as that. I came across a startup the other day and they did 6 months of research and they were in stealth, I think for 2 years, but they raised $75 million. How do they do that in stealth? Well, the 6 months of research they did, they checked competitors, what the customers wanted before they quit their jobs. And then they showed all the research to investors, say, look what we found out. And we have a unique insight. And this was a really great team. And they said, we believe based on this, that this is going to work, and we're the team to pull it off because we have verified evidence that our customers are talking this way. Here's the market. Here's what our competition is not doing. And then they were able to get the money to go in stealth. And as soon as they came out of stealth, they had product market fit. Now, let me tell you how amazing that is. As soon as you come out of stealth, you get product market fit. Do you know how many startups come out of stealth and then they die because they don't have product market fit? You go look at some of these devices like that Rabbit device and then the other one with the devices. They were in stealth for so long. They came out, they put something out in the market. Nobody wanted it. It did not sell. They didn't understand what features to build. And then they went on fire sale. And a lot of bad things happened. Actually, one of the companies, Rabbit, raised on blockchain, fractional ownership, NFTs, I think did a token sale. And now it's big time trouble. I don't know where they are from there. Total conjecture. Allegedly, there's been some foul play, but I digress. Therefore, don't reveal your cards and show yourself as amateur founders who are just trying to play founder and fake it till you make it if you are serious of talking to investors who can give you money. You have to research and show some type of thoughtfulness, some type of strategic approach. If you're not sure that these go-to-market strategies, any strategy, your business model, you haven't battle tested it, you're not sure if it works, explain to investors your research and how you're going to de-risk it and test whether it works. And you'll find investors who are most interested in really early stages because they know they put their money in, they get their best bang for their buck, or maybe they really like you and they say, thank you for doing all the homework. I trust you more. Let's give you a little bit of money to go and prove out these assumptions. That's what you're looking for. All right, we're at the competition slide. Customers will choose RegenX because we offer easy access to verified climate projects with transparency, liquidity, low investment minimums, and bundled carbon credits unmatched by competitors. Now, you've introduced so many new things here, but one of the things that stands out, bundled carbon credits, I think I said unbundled, apologies, bundled carbon credits. Nowhere have you said that up to this point in time? So why are we introducing it now? You're just muddying up the waters. On top of which, you have got all these things that, yes, kudos that you've saying things that the customer may want, but you haven't exactly explained up to this point in time why that's a possibility. For example, no greenwashing transparency. You might as well have put transparency tracking on the blockchain, like records on-chain data for transparency. You're just saying no greenwashing. How do you know that any of these projects aren't greenwashing? How do you know that the projects on yours aren't going to be greenwashing? How do you know? Explain it here that you're putting everything on-chain. Impact investment score, right? And sure, any of these companies could put a score in there. What is this score based on? You haven't explained it up to this moment in time. So I've got all these question marks. And so you might as well simplify this. Now, you might say lower investment minimums. Now, right here, you just say investment minimums, and then put right here, investment minimums are $10,000, $10K. Faster settlement times, what does that exactly mean? Tell me. Settlement times under a day, 24-hour settlement times. Check, XXXXS. Bundled carbon credits. Now, this is the big question. I have no idea. Cheaper? What does that exactly mean? So once again, you put all these aspirational things here, but you haven't done anything to provide any credibility that that is even possible. I appreciate that you put these other competitors up there, and that's going to be a good thing, but it's also a flag in how you are operating different from them. And I'm going to venture that these companies aren't doing that well. I want to know, are there case studies in this later on? That's going to come up in due diligence, but let you know, this is how an investor is going to be thinking. That's how I'm thinking anyway. Team. The RegenX team blends wealth management, climate analytics, and blockchain expertise with strong partnerships and proven traction to transform impact investing. Great. I'd love to know how many years collective experience. That would be a good thing, but pretty good headline so far. Now we've got the CEO, we've got everybody. I'd like to see just some clear bullet points. And if you've been working 18 years in wealth management, where have you been working? I'd like to see some social proof logos across the board here. This team slide is halfway there. Because if you're going to be saying, for example, Laura is an expert in climate analytics, reporting, and investor relations, how do I know? How do you qualify that? Give me some numbers, give me some data, or most of all, give me the companies she's worked at to show that she has expertise in this. That way, you're not just glossing things over and you're not making investors raise an eyebrow, a dubious eyebrow at that, and wonder if this is actually true. Traction slide. Let's pause this for a moment. So when I get to a traction slide, and I'm going to do the no spoiler version from this pitch deck, but I'm going to tell you what I'm looking for. In a traction slide, I'm looking for state of the product, have you talked to users, and what is the growth rate of the key metrics? What is the growth rate of how many users are signing up? Like, is there some type of velocity-based metric that makes me believe this team is on the fast track and deserves VC money? Remember, VC money is hyper growth money. It must go to hyper growth. VC money is not slow money. Hey, take this and give me a return every year. And yeah, let's make a 20-year relationship. Now, VC money is, you better get to $100 million in revenue in 5 to 7 years. If you're not growing that fast as soon as you get to me, then VC money is not going to be interested. Other people might be interested, but that's where you have to understand there's a difference between building a unicorn with a U, U-N-I-C-O-R-N, and a unicorn, Y-O unicorn, which may be just a boring business that makes $2 to $3 million a year. The investors are going to be completely different. But in the world of blockchain and the world of investing, well, I'm going to be thinking that the expectations are really high. So once again, I'm going to be looking for state of the product, user validation, some form, and some type of velocity growth metric. Let's take a look and see if we have that here. We have a prototype product, engaged developers to build an MVP on Stellar, 5 engaged investors, and conducted over 100 interviews with key stakeholders. It's a start, but there's mixed signals. First of all right, you have a prototype product. We don't understand. I don't know if this is working or not, but you're saying engage developers to build an MVP. An MVP is your prototype? I don't understand. So now I've got question marks right here. So if you've already engaged developers to build MVP, then is your prototype product finished? I don't know. So you're building on Stellar, which is fine. You should have mentioned that. If that's actually the layer, is it a layer 2? I don't think Stellar is a layer 1. It's been a while, so I'm not too sure. And then you got 5 engaged investors. We don't know what that means. Like, what does that exactly mean? And that's not traction. Intentions are not traction. And conducted over 100 interviews with key stakeholders. Okay, that's a promising sign. So we're getting there. It's just not clear. And then you got all these bullet points. So let's take a look at these bullet points. Partnerships with Austrian Stock Exchange and KPMG. Okay. Partnership. What is that partnership? You are throwing around a big name. So if I contacted the Austrian Stock Exchange or KPMG and I say, hey, do you have a partnership with RegenX? I'm just doing some due diligence. What are they going to say? Think about this for a moment. Partnership to build on Stellar blockchain and utilize their network of millions of investors. I don't believe this partnership is actually a partnership. I believe that these blockchains always say you can become a partner and build on us and we acknowledge you, but that doesn't move the needle for me. Completed 100 plus wholesale investor interviews. Don't know what wholesale investors. You keep saying that, and I'm getting very frustrated because I want to know what that means. I guess I could go look it up, but that's not my job as an investor to go look it up. $100,000 raised from Startup Bootcamp Hatcher. Okay, so here, this is good. Okay, $100,000 raised. So why did you just say that? Why did you just say at the top, we raised $100,000? $20,000 grant received. That's good. So, all right. So I appreciate this. I appreciate this. 5 expressions of interest from early investors. That doesn't mean anything here. All right. Use that as an inflection point. Use that as, hey, to create FOMO, we got investors on board. Launch dashboard prototype. Okay. So that means it is working. So the MVP is the dashboard, or say we have already launched the dashboard and we're building the rest. You could say something like that. Regular meetings with Australian Securities Investments Commission for regulatory compliance. I don't know what that means, and I don't know if that's actually traction. What have you accomplished from there? Like, have you got your licensing? I think you're going to need licensing. Give it to me in cold, hard facts. When you present information to investors in a pitch deck and it's vague, you immediately lose trust with those investors. Like, you completely lose it. Because if I have to fill in the blanks and I have to go, what are you saying? And you look like you're kind of fudging the details. You're just saying, oh, we've made $1 million plus. Well, how long did it take you to make that $1 million? And exactly how much money have you made? What happens when later on they say, okay, we're interested, and they do due diligence, and they say, we thought you already had 5 investors? Or what happens during due diligence? They ask you and they say, well, tell me when your investors come on board, or how much are these investors putting in, or who are these investors? What are you going to tell them? Now you're between a rock and a hard place, and you're stuck trying to be vague. Don't do that. Be as hardcore and precise as possible, and understand that investors accept that you're not going to have all your poop together. You're not going to have everything figured out. You're going to say, this is what we've achieved so far. And if they point out a gap to you and they say, well, you need to go talk to the Australian Securities Commission and get this licensing. What have you done? And you say, yeah, absolutely. That's in our plans. We knew that. You should. We'd love to keep you posted when we get that conversation done and show you the paper. But here's the best part, that you raised $100,000 from Startup Bootcamp and Hatcher Group, FinTech Accelerator. I want to know what they invested in. What were they invested in? And I have a feeling that they're going to have opinions on what you put in this pitch deck as well. So it's good news because you can test your pitch deck with them. I bet you if I sat in the room with them, they probably agree with a lot of things I have to say. Or they may say, no, Ed, this is not what it is. This is what we understood it is. And this is what we want them to do. And I'd be like, well, that didn't come through on the pitch deck. So I'm sorry, we're not on the same page here. Funding. You are going to raise $250,000 to onboard 5 climate projects and 100 investors in year 1 to generate $3 million in revenue. Okay, I like it. Problem is, I don't believe that you're going to be able to do this. Why? Because of all the missing information, all the gaps up to this moment in time. We got use of funds, that's fine. Use of funds right here. So this, although it's a very clean slide and it's a nice statement, I don't know. It's all a matter of trust. Let's overview where this pitch deck basically went off the rails. First of all, kudos to this founder, clean pitch deck. Way better. I've sent so many pitch decks back because I get big walls of text. At least I'm able to read and focus. That's the reason I'm able to give this feedback. And I appreciate all you founders out there who are brave enough to send me your pitch deck. So I just want to say kudos to you as founders. You are not getting criticized on the value of who you are or the worthiness of your idea. I think it's very worthy, and I believe that fractional investing on the blockchain for trust and smart contracts is the future of our entire industry. I dig it, I like it, and I want to encourage you to push forward. What I am going to give you crap about is the way that you're communicating, which is the reason you come here and the reason I provide this. But as soon as you muff up the problem and the solution, well, guess what? The rest of the pitch deck gets derailed because I don't know where I'm anchoring myself for business model, how you make money, competition. I don't know how you're doing it. And that's the reason, everyone, problem, solution, market are so important. If you had to spend 80% of your time up front perfecting your pitch deck first, I would focus on those 3 slides. The problem is every founder gets so diluted focusing on the other slides that it doesn't get to the point where I have a very solid problem, solution, market size that anchors me and then makes me say, now I want to read the rest of the pitch deck. That's the issue going on here. I hope that's helpful. And again, want to encourage you, look forward to future iterations. Clearly, you've got something going on if you've already got $100,000 from a FinTech Accelerator. So keep going. Look forward to your updates. For the rest of you out there, if you want your pitch deck critiqued and reviewed, leave a comment and I'm going to give you instructions and tell you what to do. Just say, how do I want to submit? And then you get tagged and I'm going to be looking for your contact because you're going to be sent instructions on what to do, whether you qualify for pitch deck or not. There will be a possibility that I will send it back and saying you didn't follow my instructions, and that is happening more and more. Why am I doing this? Because I want to focus on critiquing pitch decks like this one, which is what I'm appreciative of, that actually went through and made sure they did everything possible to follow what I'm going to be judging the pitch decks on so that I don't give the same critique over and over again, because this was really interesting in terms of breaking down problem solution, looking at different possibilities. But if I didn't even understand the problem solution, we didn't have a big headline, well, then I wouldn't even be able to have that conversation. So that's what makes these pitch deck reviews, and I'll always be open. You don't need to be qualified. You don't need to be going on YC. You don't have to be a YC company or Techstars company for me to spend time with your deck. I want to keep it open and democratize this for everybody. You're welcome. That's what I want to do. Don't waste everybody's time. Don't waste mine, especially don't waste yours. And let's get your pitch decks to a certain level so that I can critique it and make it valuable for this entire community, because that's what this YouTube channel is here for. In the meantime, everybody else, watch the videos that I put on the screen. There's a lot of other information on the format that I want you to follow. And also, there is a playlist of all the other pitch deck critiques and reviews that I've done. Check it out and do as much as you can. And then I'll be able to go deeper in your pitch deck, and I'll be very appreciative of your effort, and I'll reciprocate in return. Thanks for hanging out in this pitch deck critique and review. I'll see you in the next one.